I've seen the same thing over the last couple of weeks with clients calling up saying, "Hey, listen, we're in a jam. We're 3 months in, and the banks decided to pull out for whatever reason. We don't have enough of capital. We have to pull out for whatever reason. And it's leaving a lot of people high and dry in the marketplace, having to go out and find that additional financing. And the other thing that I found interesting too, and I've been doing this for a while, is from a business owner standpoint, like you said, they always go to the bank. They don't know about our marketplace, and there's different mechanisms for financing outside of the traditional banking world.
Hey, welcome listeners. Today I have the distinct honor and privilege of having a great friend, an investment partner who works with us on a lot of large deals out of New York, Scott Diberardinis. Scott, welcome to the show today, man.
Hey, Paul, great to be here, man. Thanks for the invite. I'm looking forward to it.
Yeah, absolutely. So we're going to dive into it here in just a minute. Just for a little background, though, Scott does a lot of larger projects. We work together on deals that are normally starting at around 25 million and going on up from there. And he's really connected been in the industry forever, connected into New York with the hedge funds and the family offices and things like that. And because of that, they do a lot of really creative things, a lot of creative financing. I thought today would be a great opportunity to just throw some ideas around to hear some of the creative projects that they're working on and some of the uniquenesses, particularly today with, as you and I were talking before we started about banks, that they're pulling deals halfway through the process.
They are.
I was just talking to a client yesterday, Scott, who's about 2 months into a 30-day process on getting a line of credit with a bank to expand his business, and they're just delaying and slow walking the thing, and he feels like it's not going to happen. And we're seeing more and more of that. So I felt like this would be really timely because I know we're funding deals, you're funding deals every day, and some really creative stuff. So I'm going to toss the ball to you and just give us a little background, kind of just your history in the industry, let's talk about some of these products, man.
Yeah, great. And thank you, Paul. I appreciate it. It's a really cool thing you're doing, and I'm glad to be here today. So by background, I always like to say I'm a recovering banker. I spent probably 15 years with both Chase and HSBC. So I was a commercial lender in that space for a long period of time before I decided to get out. And I think it was 2012. I just had it back then. I just had enough of banks not saying they're saying they're gonna lend, and they never did lend. So it's something that's been pretty stagnant across the marketplace for a long time, right? And especially when you work for conservative banks like Chase and HSBC, who are probably two of the most conservative banks in the marketplace, it's always tough to help clients. So I got out of that. I got an asset-based lending on the commercial real estate side, and then I was in there for about 7 or 8 years as a direct lender, and now I'm over here as a direct lender for probably 4 years now, something like that. So it's exciting I like working on this side of the fence. It's different than the traditional banking world. And as you said, there's a lot of different opportunity to be creative when it comes to looking at deals and working with deals too.
Yeah, it's interesting. It's so many people, when they're not looking for capital every day for a project. So it's something that they need from time to time, right? For a new project or something, an expansion. And that's when they're looking out to try to find money, and they have no clue the world, right? Everyone thinks, I'll just go to the bank and, the local bank or maybe one of the larger banks for a larger process. But, it's like I tell people, all the time, it's like, well, the bank A is not necessarily the best solution. And B, they spend billions of dollars a year telling all of us how much they love us and want to serve us. But at the end of the day,
right.
Their pecking order are the regulators, the board of directors, the shareholders, and you might be somewhere down the line, in that process.
Correct. And, the other side of that too, all great points is, the bank, traditional bank, their bloodstream lifeline is, the collecting deposits. So whenever they fund a deal, they're going to ask you to move the relationship over. And sometimes that's hard for businesses that have had relationships with a certain bank for 20 some odd years. They got to pack up and move over. So In our space, Paul, the alternative lending space and direct lending space, we just want to put money out on the streets. We don't care about deposits. You can continue your banking relationships. You don't have to worry about uprooting any of that stuff. It's more, we want to see that you have a need. We want to see what that need is. We want to fulfill that need and move on to the next opportunity that the client has and build that relationship. As direct lenders in the alternative financing space, we're no different from a relationship standpoint than a bank is. We just make the process a little easier and not as tedious.
Right. Right. Yeah, it's amazing. I love working with you guys just because of the creativity, the flexibility, and the fact that you're not just putting everything through a computer model, and you get an answer. It's like, okay, does this make sense?
Right. Yeah, that's pretty
Yeah.
much it. Every deal has to stand on its own. There's a couple of things that we require like anybody else does. And I'll kind of hit those bullet points in a few minutes when we get there. But, that's the nature of the market right now. And you're right, making reference to what we said earlier, I've seen the same thing over the last couple of weeks with clients calling up saying, hey, listen, we're in a jam. We're 3 months in and the banks decide to pull out. For whatever reason, we don't have enough of capital, we have to pull out for whatever reason. It's leaving a lot of people high and dry in the marketplace, having to go out and find that additional financing. And the other thing that I found interesting too, and I've been doing this for a while, is from a business owner standpoint, like you said, they always go to the bank. They don't know about our marketplace, and there's different mechanisms for financing outside of the traditional banking world. So it's important for us to talk to everybody, make them aware of what's going on, because a lot of times it's just easier to work in our world than their world, and it could sometimes save them a whole bunch of money and a whole bunch of headaches too.
Yeah, yeah, no doubt about it. I mean, I feel like in so many ways, we're even more closely aligned with that business owner, that entrepreneur's vision and, mission to succeed because, we're not some monolithic bank. You have money, you want to put it on the street, we want to help get them funded and financed so they can be successful. And it's a win-win cycle.
Correct.
None of us are trying to please shareholders or anything like that. We're just trying to make the deals work so everybody wins at the end of the day, right?
Correct. That's it. That's
Yeah.
really it.
Well, let's talk a little bit about some of these large balance projects, these development funding products and things, and start off with a little bit maybe of kind of the industries that you're seeing a lot of this in, and that's a real fit for this kind of thing, and then dial into some of the details on some of these funding options that maybe are, and the differences versus what you would get at the bank if the bank would even fund it.
Yeah, that's a great question. The difference, I guess we'll start with the asset class, right? So for us as an organization, we've been in a commercial real estate business for 22 years. So that's how we cut our teeth. So naturally, we're going to, as an organization, want to focus on the multifamily, the mixed use, the industrial. We'll look at retail. But outside of that, we also have the ability with this line of credit product to work in the cannabis industry, work in renewable energy, as well as oil and gas. Now, comparatively to the banks are always going to want to work in the multifamily. They're going to work in the mixed use. Retail, depending on what it is, right? Restaurants they're not very fond of. They've never been. Industrial, office is a tough space to work in right now, just because there's a lot of because of COVID. The office space industry, real estate industry has taken a hit simply because a lot of employers, large employers, figured out that their employees can work from home and be productive, and at some point they're going to have to not have to carry all the office space that they have now. But that's some of the industries that we work with. As far as what we do compared to what they do, most banks will require cash flow, debt service, collateral, credit score, usually a big thing. Most banks want, and I don't even know what the credit scores are these days in the traditional banking world, which is, maybe 680 to 700, depending on where it is. When you kind of step into our world of the direct lending space, there's things that are important, things that aren't important. like everybody else, we require skin in the game, but that skin in the game and the collateral may also take the place of, hey, they've got a good asset, they have skin in the game. Maybe we don't need a credit score to get this deal done because of the asset. Or maybe it doesn't have to cash flow because of the way their performance trajecting out. Because a lot of times if it's a new development, right, ground up construction, there is no cash flow. You have to go on pro forma. And a lot of stuff we're seeing now is the multifamily marketplace. Ground up developments everywhere, just sprouting up all over the place. And a lot of the great developers that have great experience are coming in and that have done these over and over and over again. So the experience is there. What they're projecting out is correct. That when they're quoting market rents in those particular areas, that's where it usually is going to hit, and that's where they're usually going to be able to rent or lease up based on what the market is out there. If that makes sense.
Yeah, for sure, for sure. And you started to say a little bit in there too, like even the banks will do the multifamily and things like that. If you have everything, all of your I's are dotted, your T's are
Correct.
crossed, but then you get in these other spaces like renewable energy and, other industries, oil and gas, things like that. That good luck there, right?
Yeah, and it does. There's some banks that may do that, but there's not a lot that have that flavor. Um, National banks that are FDIC insured won't touch cannabis because it's still illegal on the federal level here in the U.S. So that's off the table. There's probably maybe a handful of banks in the country that will work with cannabis, but they're not like a Wells Fargo or a Chase or an HSBC. They're a smaller credit union, something that has a different charter that allows them to work with that. But for the most part, those are industries that we can certainly entertain and consider based on how we're set up on the back end.
Talk a little bit about because the structure of this, because we're really kind of talking about, in this case, a line of credit product that will fund literally 100% loan to cost. Talk about how that's structured. What does it look like? Because you also have some skin in the game. What does the skin in the game do?
Yeah.
As part of
Absolutely. So
part of the
the
loan.
product, it is a line of credit product, and think of the line of credit product as a development, a construction line of credit. It's not very clear. It's not a revolver. You can't use it, pay it down, and then use it again. That's not what it's set up for. It's set up for the purpose of ground up development, expansion, refinance, acquisition. It hits the asset classes that I talked about too. What is also good is we have a pretty broad range on our minimum and maximum. We're considering deals now at 15 million, and we can go all the way up to 2 billion as a one-off as a direct lender, which is pretty remarkable in the marketplace. Geographically, the United States, we do select international locations. I'm looking at a deal right now in the Dominican Republic. They're building a nice hotel resort down there, and there's another multifamily that's going on down there also. We have something in the Grand Caymans that we're working on, and some other stuff with the Bahamas too. So internationally, we're okay if it's the Caribbean. Once it gets into the a little further into the international marketplace, it's a case by case basis. We're an interest only payment product. Right, interest is only paid on drawn funds. The terms are, it's a 5-year term with a 1-year extension if needed. Key right here is it's non-recourse with standard bad boy carve-outs, and there's no prepayment penalties. So for prepayment penalties, for conversation purposes, if you never draw down on the line, you never owe a payment. So there's no payment there. For prepayment penalty, sure, it's a 5-year term. You may build the project in 24 months, and then it takes another 12 to stabilize. Well, once it's stabilized, you can refinance it out at that particular point in time, and not have to sit there for another 2 years on the line. It gives you a lot of flexibility to take advantage of what the market is. Because the market in a couple of years from now could be completely different than what it is now. So it'd be more beneficial, to refinance out and take advantage of a lower interest rate. Right now we're putting money out between, 8.25% and 10.25%. Most of the stuff that I've seen go out over the last couple of weeks have been sitting around 8.25, 8.75. I think as a country, I think we're at a hole on the top end of the interest rate. I don't think we're
Yeah.
going up any further. At some
Mm-hmm.
point, it's going to be coming down, but
Yeah.
that'll remain to be seen based on what the Fed's going to do and how the Fed's going to do it. Um,
Yeah. Well, I mean,
they-
prime's at 8.5 right now. So, I mean, and I think I agree with you. We're at the top end of that. They may have one more bump, but I don't think they're going to bump next month, and they're just going to kind of watch it. And we're
they
pretty much
have
at
to,
the top.
because I mean, it's making at the marketplace is really tough right now to do business. I mean, just think about it as a balloon payment. All these balloon payments coming due, this year and next year, right? As a business owner, you probably got into that interest rate at 4 or 5%. Now you got to refinance out at prime plus whatever that scenario is going to be for a traditional lender or a lender in the marketplace. So there's a
Yeah.
lot of things that could make that number go up substantially on a monthly mortgage payment.
Yeah. Yeah. Okay. So we're talking about it's more like a construction loan than a traditional line of credit. So you get approved for this loan, 15 million up to 2 billion, and you're going to draw down as you're building out the project. And your
Correct.
skin in the
So
game, how does your skin in the game work here?
sure. So with anybody, with like any financing company in the marketplace, whether it's traditional or alternative, everybody requires skin in the game. And the example I'll give you is, Paul, you go out to the marketplace with a $15 million project, and we'll use Wells Fargo. You go to them and they say, Paul, we love your project. You got to come to the table with 20% cash, and we're going to finance the other 80%, 80-20. There's 100. There's 100. The way we look at it is we'll still have a requirement for skin in the game. Most likely it'll be 20% if it's a development deal and a traditional tranche schedule. And we treat that just a little bit differently than the market does, right? Going to a bank and doing the 80-20, you're going to spend your 20 first before the 80 kicks in. What we do at our end is that 20% is your built-in interest reserve, right? That goes into an interest reserve account. It sits there to service the debt during the period that you're building the project. So that's great for two reasons. One, as a lender, we don't have to underwrite for debt service, and we don't have to underwrite for liquidity because we already have that in-house, and that's going to be used to service the debt. Now, on the other side of that, as a lender, and I'll explain how we get there, we're able to do 100% LTC. So, for example, Paul, you come to us with that same $15 million project that you brought to Wells. We love the project. We're going to require you to come to the table with 20%, which is $3 million. That's your built-in interest reserve.
Right.
On the other side of that, we are going to give you a true line of credit for $15 million that's going to help you complete that project, with your LTC schedule and draw schedule in hand. So it's pretty cool product, and we get there a couple different ways, and I'll explain that to you also. Because I get the question all the time: how can you put 100% of the money out on the table? Well,
Right.
as a lender, it doesn't matter what the asset class is, whether it's cannabis, multifamily, gas and oil. It just doesn't matter. We always put a lender risk policy in place, and that lender risk policy helps us in case something happens to the project. It goes bad, something goes south, you can't refinance it out, whatever it is. That's our mechanism, one of our mechanisms to get out in case something goes bad. The other part of it is not your 20% not only serves as your built-in interest reserve, but it also helps to over collateralize the loan too. So with the insurance wrap and over collateralizing the loan, that gives us the confidence to go out to the marketplace to be able to do 100% LTC to allow any developer to complete their project, if that makes sense to you guys.
Yeah. So, I mean, so the amazing thing about that structure for the loan is you're guaranteeing basically as a lender, you're going to be made whole. So you're really looking for, if someone has that initial liquidity, the project fits your box in terms of what you like to do, which is a very wide, in my experience in dealing, it's a very wide swath of industries. then really you're just looking for some experience, right? I mean, you got to know that these people can, can make good on their project plans. It's not a pipe dream, but it's like, okay, yeah, we can actually get this done.
Yeah, and yeah, exactly it. So that's the other, besides the 20% and the skin in the game, the other important thing is the experience, right? We want to know that whomever we're working with has the wherewithal to be able to complete the project, whether it's a $15 million project or a $100 million project.
Mhm.
And the way we look at it as an organization is we're not developers. We don't grow cannabis. We don't sell, THC through dispensaries. We're a direct lender. So if something goes bad, we don't want to have to take the project or hire somebody to do it. We'll just sell it in the open marketplace, make ourselves whole again and get out. But to your point, as long as they have the experience, that's what we want them to come to the table with and assure us that they can finish the project. Now, with that said, I unfortunately just had to turn a loan down. It was last week simply because it was complete lack of experience to be able to perform based on what they were bringing to the table, which, that does happen. And it's things that we require that we have to look at, and they just didn't have the experience to get it done. And, I proposed to them that maybe they start at a smaller level because they wanted to come out of the gate swinging at 100 million. And there's just no way that we would be able to feel comfortable doing that, and I suggested maybe they start a little smaller and grow into it. And they unfortunately didn't want to do that. So we had to pass based on what it looked like.
But but at the end of the day, I mean, because it's a non-recourse loan, so you're just looking for people that are involved in this project that have the wherewithal to finish it. Because again, it's in everybody's best interest for this to go well.
Correct.
Your interest,
Correct.
the borrower's interest, the insurance carrier, everyone, and since you're not looking for, but so much skin in the game. I mean, that they're bringing equity in terms of that standpoint of know-how.
Right. Yeah. And again, the non-recourse thing is very appealable, right? Because if you don't have to personal guarantee it and put your house on the line, put everything on the line, that kind of makes this very, very enticing to a lot of people. And, from a lender standpoint, we're okay with that. We just got to check all the boxes on the back end to make sure that we can move forward with this, knowing confidently that they have the experience. We know they have the liquid cash and they're going to be able to perform.
Yeah, absolutely. And I know one of the other things too that I've seen on the projects that we've worked together on is that a lot of the soft costs and things, there's a lot of things that we can put in, including this line of credit for the LTC that aren't kind of normally involved in a loan structure.
That's correct. We want to be able to cover the whole project from start to finish, right? And it's something that makes us a little different in the marketplace. The product itself is different in the marketplace. And, I had a call with a gentleman the other day that just an experienced developer, just trying to wrap his head around it. And he couldn't, and I have to put some stuff together for him so he can see what it looks like. And that's okay because it's unique. And, in some industries, it's really kind of shaken up the industry, especially in the cannabis industry. Because, the cannabis industry has been run by hard money for so long, right? Hard money meaning they're putting money out at 15 to 18 to 20 some odd +%.
Yeah.
Our rates are still the same, whether it's cannabis or multifamily or renewable energy, right? And that's where these guys are like, okay, that makes a lot of sense to us because we're putting, we'll even call it 8% minus 20. Okay, we're putting 12% back in our pocket, in interest over the course of a loan.
Heck yeah. Yeah, no, it's really an amazing product, an amazing opportunity. Tell me, I know that a couple of projects that we worked on, a senior care facility and a big renewable energy space. What are some other projects that you've talked about cannabis, but some other industries maybe that come to mind, some interesting projects?
There's an online marketplace company. It's I forget the industry. I can't think of it. Like an Amazon, but they're a little smaller. They're in a growth mode. So that growth mode is redoing their infrastructure. And then they're going to be making acquisitions of other like companies, to continue their e-commerce. That's the word I was looking for, to continue their growth, right? Which we're actually very close to getting them ready to fund. The first phase is 100 million, and then they're going to do the second phase. The first phase is 100 million, which is the infrastructure and some of the acquisitions, and then the second line of credit will be an additional 100 million for additional acquisitions. Again, going back to the line of credit can be used for several different things. In this case, this is an expansion line of credit opposed to a development line of credit where it's an established company. I mean, they're throwing revenue. I mean, they're printing cash. That's how nice this company is,
Right.
which makes it even more of a less of a risk, with all the assets and everything else that they own.
Yeah. So there's a lot of flexibility at the end of the day.
There is. Again, you got to check the boxes to make sure everything's there. And, if it's there, then, there's a lot of things that we can do. And, the 20%, skin in the game, and it varies based on the deal. I mean, it could go up to 30%, right? But it just depends on what the deal is.
Right.
But on the other side of that, you're getting 100% of the line to get this deal done for you.
Yeah, it's just amazing that skin of the game piece is carrying the interest payment on the loan, so you're not making payments during the process. And then
Correct.
I believe at the end, if there's a balance left in that reduces the principal balance on the
Correct. The customer's credited those funds back. That is correct.
Yeah. So it's amazing. You don't have to have liquidity because you've already injected it in there. You're not credit score driven. It's really about experience, get some skin in the game, and have a project that makes sense.
Right.
Starting at 15 million and going on up. This is not a $2 million deal. This is 15 million. And when we first started working together, 25 million. So you've expanded the aperture a little bit.
We did, and we opened it up the market a little bit because we felt, based on some of the market knowledge and some of the stuff we were learning, that some of the underserved marketplace was that 15 to 25 million. And if we can open up a product like this to that marketplace, it's going to give a whole bunch of new sponsors an opportunity to get projects underway.
Yeah. Well, that's awesome. Well, I know you guys are great to work with. I've really appreciated it, and our clients have. As we wind down, Scott, anything more that we've missed that you wanted to say or add?
No, that was, we pretty much covered all the important bullet points. I like to, it's like, you sell the sizzle, man. What's the things that are really enticing? And all the things that we talked about, from the non-recourse to the non-prepayment, to the skin in the game, and what kind of differentiates us from a traditional banking experience, or even from other alternative lenders, are everything that we kind of hit. And, I will say, if there's an opportunity for us to look at transactions, we're always looking to build relationships, right? And we want to continue to build relationships with the marketplace, because, that's what we're about. And that's how we want to make sure that, we continue to help customers meet their objectives and goals and growing their business.
Yeah. No, that's great. That's awesome. Well, like I said, I've had a great time working with you, and hope to do a lot more of these projects as well going forward, because the process is awesome. And you guys do a phenomenal job. So,
Great.
Hey, look, man, I appreciate you coming on today and taking some time.
Yeah, this was fun. I enjoyed it. I was a little like, hey, I've never done a podcast before, so this is kind of cool. But yeah, no, this is a great experience, and I hope we're able to meet some people out there that are interested in taking advantage of what we put out in the marketplace, or at least having a conversation of what we can do for them.
Yeah, absolutely. Awesome. All right, Scott. Have an amazing day, man. Thank you again. Hey, gang, just winding down here today. Thanks for listening to the show. And as always, if you need capital to grow your business, you're looking to purchase commercial real estate, or build a building, or invest in commercial real estate, or you're looking to acquire a business or a competitor, or just need growth capital, we'd love to talk to you. We fund businesses all day long. Our mission is to help entrepreneurs win and to fund their businesses and fund their dreams so that they can make an impact in their community. Reach out to me today. Go to our website, click the button to schedule a 20-minute conversation, discovery call. We'll have a quick conversation, see if there's a need, see if there's a fit, and we can take it from there. The website is VPC, Victor Paul Charlie .capital. That's VPC.capital. All right, there's no .com on that. It's VPC.capital. As always, keep crushing it, and hope to see you soon around here. Take care.